Hello there, phenomenal leader. Welcome to Take the Lead, a consciousness movement with Angilie Kapoor. Now, this is a show where each week we help you become one with the rhythm by stepping into your potential. Now, how can I do that? You might be asking. Well, by embodying your inner phenomenal leader and taking the lead of yourself and in your own life. Now, as you may know by now, my name is Angilie Kapoor and I am your host. I'm also a best selling multi book author and inspirational speaker, as well as the founder of my conscious leadership coaching company, Oversight Global. Now, at Oversight Global, we are on a mission to address the consciousness crisis in the world, one leader at a time. Now, today we're going to be sharing with you a conversation I have with an absolutely amazing guest. I am super excited to share with you my interview with Steve Selengut, a number one best-selling author and a 40 plus year investment advisor who today coaches individuals and professionals in creating retirement income independence. Now, in our discussion, we explored the world of retirement independence as he shares his insights from his book, Retirement Money Secrets, and how his unique income investing approach can empower you to achieve financial freedom regardless of market fluctuations. Now, let me tell you that it's an absolutely amazing, insightful conversation. So be sure to stay right there. You don't want to miss this. Now, this past Friday, September 20th, I had the amazing opportunity to be on Stories That Inspire Hope live on Transformational Talk Radio. I was able to chat with host Cornelia Stephanie about my journey and how we can all find hope in life's stories. Now, if you missed it, no worries. You can tune into the replay at the link that is on your screen now. So don't miss this inspiring conversation. So last weekend was Emmy weekend. I hope you were able to tune into the primetime Emmy Awards that aired on Sunday, September 15th, but I especially hope you were able to catch the captivating red carpet interviews prior to the awards, which included interviews by Hannah Olivas of Phoenix TV, who recently graced our show as a guest. Now, I had the amazing opportunity to experience a small part of Emmy weekend, and I'm so thrilled to share with you my unforgettable Emmy weekend experience. My journey included a red carpet pre-Emmy soiree exclusive high-end networking event where I was able to walk the red carpet and was interviewed by Gianna Salazar of Hollywood Engaged. The event was a gathering of dreamers, actors, actresses, writers, and producers, all driven by the dream of making it big in Hollywood. It was a vivid reminder of the importance of being authentically you and the power of dreams to fuel our passion and motivation. Remember, achieving those dreams is all about mindset and staying true to yourself. I was also blessed with being invited to Phoenix TV's pre Emmy luxury celebrity gifting suite event, where I was able to mingle with stars and receive some fabulous gifts. Yet, amidst the glamour, I was reminded of my introverted nature and the importance of managing my energy. For fellow introverts out there, it is crucial to find time to recharge, even amidst the hustle and bustle of such events. Whether it's at conferences or a busy vacation itinerary, giving yourself space to recharge ensures that you're ready to shine again. Now, I'm looking forward to having the opportunity to have experiences like this in the future. If you aren't already connected with us on one of our or even all of our social media platforms, or if you aren't yet a subscriber to our weekly newsletters, I encourage you to connect with us and subscribe to our newsletter so that you can get some behind the scenes peeks at our experiences like this. Now, as you know, because I've been talking about it for several weeks now, I am super excited because the latest book that I am a part of, Jim Britt's Cracking the Rich Code, launched back in mid June and it became a number one international bestseller in a day. Now, I am so honored and privileged to be a featured co author with 20 other entrepreneurs and success strategists, along with Jim Britt himself, one of the world's top influencers, coaches, and speakers. Now, the book is endorsed by none other than Tony Robbins, with the foreword written by the legendary Brian Tracy. Media outlets NBC, ABC, Fox, and CBS News have all run stories on their website about the book. So be sure to go to our website, which is oversightglobal.com. Scroll down a little bit on the homepage to find the book. You can also click on the QR code that's on the bottom right of your screen now to go directly to the book page. So trust me, you will absolutely love this book. Lots of golden nuggets full of wisdom from very successful people around the world. My chapter is chapter 6, by the way. Okay, so as you may well know by now, the premise of this show, Take the Lead, a consciousness movement, is to help you recognize and embody what I call your inner phenomenal leader, your true, authentic self that you are truly meant to be, to help you uncover the power that you have within to step into your potential and contribute to the world as only you uniquely can. Now, to do this in a fun way on this show, we look at the parallels of couple dancing like salsa and ballroom dancing with leadership development concepts to help you become the leader of yourself and in your own life. Now, like I mentioned today, we're sharing with you my insightful conversation with Steve Selengut, who is a number one international best-selling author and a 40 plus year investment advisor about the world of retirement independence as he shares insights from his book, Retirement Money Secrets. Now, let's look at the parallels of dancing with the leadership development concepts that Steve presents us with in our conversation, which is taking the lead by controlling your finances. Now, as we've explored many times, salsa, ballroom, and couple dancing are vibrant expressions of coordination, rhythm, and partnership. And these are elements that closely mirror the journey of taking charge of your finances, particularly when planning for retirement independence and income investing. Just as dancers must harmonize their movements and maintain a seamless flow, individuals need to synchronize their financial strategies to enable a stable and prosperous future. Leadership in financial management, much like the art of leading in dance, demands foresight and the ability to adapt to changing rhythms and circumstances. A strong leader on the dance floor must guide with clarity and confidence, providing direction while remaining receptive to their partner's cues. Similarly, in financial planning, one must craft a clear investment strategy while being responsive to market shifts and personal needs. Moreover, the balance between structure and creativity in dancing is akin to the delicate equilibrium between disciplined saving and innovative investing and financial management. Dancers rely on a structured framework of steps and techniques, yet the magic often happens in the creative interpretation and personal flair each dancer brings. Similarly, effective financial leadership involves adhering to sound investment principles while also exploring innovative approaches to grow and protect your wealth. Both endeavors require a keen sense of timing, the ability to pivot when necessary, and a commitment to continuous learning and improvement. As in dance, where the goal is to create a beautiful, cohesive experience, and financial management, the aim is to construct a secure, fulfilling retirement plan that sustains one's independence and quality of life. And with that, what are your thoughts or questions on our monologue today? Let us know by emailing us at admin@oversightglobal.com. Now, that, folks, for our commercials for our redesigned company website, oversightglobal.com, as well as my website highlighting my speaking at angeliekapoor.com. Pretty cool, right? I'm super excited that they are both up and out there in the world. So be sure and go and check them out at the links that are on your screen now if you haven't already. While you're there, be sure to sign up for our weekly newsletter that we put out filled with updates, tidbits, and insights, as well as grab yourself some freebies from our freebie page while you're at it. I know, like, I like free stuff, so I bet you do too. Am I right? And do us a favor and let us know what you think about our websites, will you? Okay, so let's get to our featured guest spotlight. Now, Steve Selengut is a #1 best-selling author and investment advisor with over 40 plus years of experience managing over 300 different portfolios at a time, both domestic as well as abroad. Today, Steve coaches individuals and professionals in creating retirement income independence for both themselves as well as their clients. Today, Steve is here to help us explore the world of retirement independence as he shares his insights from his book, Retirement Money Secrets, which I actually have right here, and how his unique income investing approach can empower you to achieve financial freedom regardless of market fluctuations. Now, phenomenal leaders, without further ado, please help me welcome to the show the wise Steve Selengut. Steve, welcome. Thank you so much for being here today.
Well, thank you. I'm sure I'm blushing from that introduction. Thank you very much.
Oh, absolutely. Now, before I forget, I do want to let our viewers know that we will be periodically displaying Steve's contact information and social media platforms. So, if at any time you feel called to check out more information on what he does and how he might be able to help you, be sure to go to those platforms, follow, and connect with him. Okay. So, you have been part of kind of this financial and investing world for a really long time. So how did you kind of get into that? Is that something that you always loved working with money and numbers from childhood, or did you kind of just fall into that?
I pretty much grew up within it.
Okay.
My dad was a real estate developer and agent, and he had a unique business where he uh, built houses, rented them. In the, we were on a summer vacation type area, so he'd build summer homes and then some larger homes. He'd rent the larger homes in the winter when people weren't using them, and so on. And he also did their financing.
Mhm.
So he had mortgage income, he had rental income, and he had an insurance. Uh, we'd say an insurance person working with him. So he also had the insurance. So he had all this income coming in. So certainly in our family there was no shortage. So I got tuned into that, and
Mhm.
I had my own little businesses when I was younger. I mowed lawns for people and taught water skiing to summer folk that came up, things like that. And and I didn't go to a fancy school like other members of my family did. So there was money left over. So when I
Mhm.
got to be 25, I started managing money myself. So
Oh, wow.
I got a pretty young start in the financial markets, and I was very fortunate with um, the young woman who became my agent at this brokerage firm, and she kind of took me by the hand and taught me about investing, taught me about the cyclical nature of securities,
Mhm.
dividend paying versus non-dividend paying. Uh, Really got into depth on some of the different products for not really products, but securities for income purpose, like bonds and stuff like that.
Mhm. Mhm.
And this was really before mutual funds became popular. ETFs were still 40 years away, or 30 years away at least, before they were developed. Um, so I started trading these great companies that I had,
Mhm.
and I kept investing in good dividend paying companies, and they paid income, and I was making money from two ways. I was getting the dividends, and I was getting the profits on the trading. So yeah,
Oh, very cool.
so the money was rolling in, and I got to the point where I could say goodbye to the commuting to New York, which I was doing on a regular basis, and I was making more money than I was making in my job. So I
Right.
significant. I mean, almost five times as much.
Mhm.
So it
Mhm.
was a no. It was pretty much a no-brainer to say, hey, if I can do this. I can show people how I do it. I can get them to let me do it for them. I think when I made the decision, I didn't know how difficult it would be to get licensed to do it,
Uh-huh.
and the hoops that you had to jump through to become a registered investment advisor, even back then, before the regulations really got way out of hand. It was still a lot of work to get the job done, but you know,
Mhm.
I did it. I found a different brokerage firm to work with, and we got into it, and the rest is history. We
Oh,
sold
very
we
cool.
sold our business in May of 23 for what I would call an offer I couldn't refuse at my age, and
Mhm.
that was it.
Yeah, and then so then you became a coach and started working with individuals on retirement independence. Is that right?
Yeah, it's my retirement gig, you might say. I figured people, I wrote the book, and the book is actually designed to help people uh, change the mindset, change their
Mhm.
mindset from growth in market value to growth in income.
Mhm.
And it's written to pretty much to get them to talk to me about it.
Yeah, yeah.
So
I haven't read I haven't I haven't actually dived into the whole book, but as I was browsing through, it looks very well structured and organized. And there's definitely some things that I want to dive into when I get a chance to. So, one of the things that came up for me when you were kind of explaining your experience is you've been in the finance investment world for a really long time. So you've seen all of these changes happening. So aside from the different types of investment vehicles that have kind of entered and then also have kind of left that type of industry and environment, I mean, what type of things have you seen kind of remains a constant within the industry?
um, hmm. I guess the primary constant is the um, growth in the industry and the growth in the markets, just from economies,
Mhm.
economic change over the years. I mean, certainly um, GDP has been growing for years and years. Over that period of time, it was a phenomenal amount of growth. The markets went from, the Dow was not 1,000 when I got started. The S&P was, way, way less than that. So these changes were phenomenal. I mean, they prices and indices doubled and doubled and doubled again. So
Mhm.
the growth has been constant, and that hasn't changed. I mean, it's
Mhm.
still. I mean, we were at an all-time high just months ago.
Mhm.
So that growth or the expectation of continued growth is still there, and I think we've seen it throughout the world.
Mhm.
So that is a constant. There are still fortunes being made in the markets, both the
Mm.
stock market, even in the bond market. I'm sure it's
Oh,
not.
wow.
It's a little different there, but it's not as exciting, not as much adventure there. But certainly, every day you hear of companies like Nvidia,
Mhm.
where I'm sure hundreds of thousands of people have made significant money on that security alone,
Mhm.
and hope, and eventually, when it no longer continues its climb, there'll be others that lose significant money on it. But in the meantime, it's been an exciting trip. I don't do individual stocks like that anymore. I
Mhm.
The closed-end fund vehicle that I use for my investing personally and for my coaching clients and so forth, and actually for my previous clients. The
Mhm.
last 20 years or so, it was almost exclusively closed-end funds because of the tremendous difference in income production from them. But those securities own exactly the same securities that you're trading in the stock market. I mean,
Mm,
that's
okay.
what they are. They're funds just like mutual funds in that they own all the same securities. The
Mhm.
only difference is the focus is not on growing market value. The focus is on growing the income production, and they give 95% of that income production back to their shareholders,
Mhm.
which is really kind of a unique security in the entire marketplace. They're the only ones that do that.
Oh, really? That's
They
very
had
cool.
that because they're trusts. They have to do it.
Mhm.
Mutual funds don't have to give you dividends. Many of them do, but not many of them give you significant dividends. And ETFs the same way. There are
Hmm.
certainly dozens of those that pay significant income, but dozens out of thousands that don't.
Oh, very interesting. So I know that you kind of have a different strategy and methodology that you use in terms of helping your clients, both individuals as well as corporations. So can you kind of walk us through kind of what that is and how you kind of came up with that?
Well, the process is income focused, and what I learned in running my own portfolio over the years is that there's really two significant streams of income that
Hmm.
you can use. The first is the income from the securities themselves, the dividends. If
Hmm.
you, I used to invest in what they call dividend stocks, and they'd pay quarterly dividends. And I'd invest in things like corporate bonds and municipal bonds and Ginnie Mae's. Do you recall Ginnie Mae's? Do they
I do. I
anybody
remember that.
anybody
Yeah.
ever talk about it? And other unit trusts for bonds I used to invest in for income,
Hmm.
all on the individual plane, and I learned that. So in addition to this income, I also in knowing the market cycle, learning about it, realizing that the stocks go up and down, and they always have, and they probably always will. The only thing we don't know is when and how much.
Hmm.
So what I did was I started um, telling myself for each individual position I own that if it went down a certain amount, I'd be buying more of it or starting the position. And
Hmm.
if I could gain a profit of 10%, I was going to take that profit and I was going to do it all over again. I
Hmm.
wasn't falling in love with things and holding on to them, so that once I sold them. They stayed on my radar, and if they went back down again, I bought them again. I did the
Mhm.
same thing over and over and over with the same securities. Um, Shell Oil was the first profit I ever took back in 1970 or so, and I must have done that with that same company, even though it changed names a couple times, 100 times at,
Okay.
at least, and so many other I could name like Pepsi and Coke and Exxon, and just so many companies, so many times
Mhm.
that it wasn't a difficult thing, and the amount you make, even with small profits, most people don't take their profits at all. You know,
Right, right.
so I had the profits on top of the income, and there were years when there was more made in profits than there was in dividends,
Mhm.
and that's carried over into the closed-end funds, uh, almost like it's on steroids because
Mhm.
the income itself is significantly more, probably more than double what the average stock pays.
Mhm.
Um, and the turnover is at a lower percentage rate, but it's more frequent.
Oh, okay.
So
Okay.
I mean, if you can take a 4% profit 5 times a year, basically, it's better than waiting and waiting and waiting for a 10% profit on a stock, which doesn't come as quickly as it seems. You know,
Yeah.
so it's so that's
Yeah,
that's
yeah.
the,
I
that's the
was kind of
that's the strategy. It's a trading strategy, but
okay.
not the dirty word day trading type, type thing. Yeah.
Well, I think, as you were explaining that, what I like that about that is, I think most people kind of go into investing and trading stocks kind of blindly. They kind of go in there and they're like, oh, I'll put this certain amount of money in this and then kind of see what happens. And then, they kind of leave it in there until they see that it's grown a lot. And then, then they take it out or sell it or whatever they do. But I think that the way that you are describing it is it has so much more intention and strategy behind it that it would make sense doing it that way. And then, like you were saying, being able to, multiply the income and profits that you're getting instead of waiting until it grows to this certain amount and then taking it out.
It's similar to the way you'd run a store.
Hmm.
Let's say running a department store. You got all this merchandise on your shelves, and you have merchandise of every kind. And picture one that even has things in service industries within that store. So you can own all these different things, and you set a markup. And when people come into the store and they want to buy it for the 5% markup, you sell it and
Hmm.
you replace it with another one. And I've developed a universe of 250, maybe a little more, um, closed-end funds, both taxable, tax-free,
Hmm.
and equity, that I use interchangeably. I mean, I'll go down my list. I'll look at my account. I'll say, okay, for top four profits are getting sold this morning, and I have these things that I've sold on previous days. I'll say, okay, I'm going to buy four of those that I'd sold last week or the week before, and
Hmm.
I add them back to the portfolio. So it's just like exactly like you're running a store. And I'll tell you, and there's a second parallel. Um, Most investment professionals today want to see the value of those stocks go up and up and up.
Right.
So, how many department stores do you think of that want to just see the value of their inventory go up and up and up?
Hmm.
They don't. They want to sell it. They want to take the
Right.
profit.
Exactly.
They make money by turning it over,
Hmm.
turning it over. And it's not a buy and hold approach like most people are used to. It's a buy and sell approach.
Okay. So, do you have people kind of come to you for your services who are, very much beginners in investing in the stock market?
Rarely. I think the book that we talked of is good for beginners because it introduces
Okay.
them to a way of starting with a high quality, diversified income paying portfolio
Mhm.
without the risk of trying to pick a stock.
Right.
You know what I mean? So,
Yeah.
and the average price of all these 250 securities is much less than $20 a share.
Okay.
So you buy one, you can't, there aren't too many high quality stocks you can buy for $20 a share, even one share. This way you're buying a whole diversified portfolio of them. So,
Mhm.
so I don't, I think it's a great starting position for
Okay.
newbie and young investors. But most of the people who come to see me are either getting into their 50s or so and are starting to say, one of these days I'm going to stop working. Or others who are younger. I have some of these who have made a lot of money and have their own business that um, they could sell and move
Mhm.
on. And then still others who just want to transition from what they're doing now to a higher income mode of operating.
Mhm.
So there are many different types. I've had coaching clients as young as 30, 35,
Mhm.
and as old as me, or even older. So yeah, I think
Mhm.
the oldest have been about 84, 85.
Well,
So
there you go. There you go. So, what are the biggest challenges that you find with people that you're helping in terms of, accomplishing retirement independence?
the first the most the normal one is the mindset of
Mm,
and the love that they might have for a position or a stock that's got up an awful lot and it makes up a significant portion of their portfolio.
mhm,
And that they getting them to bite the bullet, if you will, and reduce that oversized position. And there are tax consequences sometimes of doing so, but
mhm,
still, the safety element is one thing. So that's one feature of getting the mindset that market value. You just can't get on that ship and take that cruise by telling the captain, "Look how valuable my shares are." You have
mhm,
to have money, and the only way you can do that is perhaps sell some of those things or develop a portfolio that provides that money so you never have to dip into your capital and sell stuff to go on that trip. And
mhm,
that's where I get people to. I'll get people who slowly and gradually transfer millions, literally millions of dollars from buy and hold type positions
mhm,
into these high income positions. And then they determine how much trading they want to do. Because the
mhm,
base income, uh, when you're, and it's not always as high as it is now.
mhm,
Right now, it's an average of between 9 and 10%, which is higher than it was 5 years ago when
mhm,
interest rates were very, very low. Um, but that type of a percent on a large load of positions could be more as much income as a person needs, and they don't have to watch it as closely as I do to take profits, and have that second stream of income. But
mhm.
when they realize that that second stream of income can produce, well, so far this year I've got 5 months worth of income in capital gains, so
Oh, wow.
making my year 18 months long,
Mhm. Yeah,
18 compressed into 12 so far. You know,
nice.
when they see that, then they say, well, geez, that takes me from an inside cabin to one with a balcony
Right.
on the cruise ship, or that takes me out of the back of the plane to the front of the plane.
Mhm.
And those are big, big steps. I mean,
Right, yeah.
if you fly from New York to Singapore,
Yeah,
18
that's a long
hours or
flight,
something
yeah.
like that, and you got pretty much a bed to lie down on. That's a big thing.
Right,
You-
right,
You're up and
exactly.
you're up and running when you get there instead of spending the first day in a hotel asleep.
Exactly.
So
Exactly.
so these are the types of things, and it's really similar to what I was dealing with my client base. I was speaking to a gentleman earlier and talking to him about how once you make the mindset move
Mhm.
to income and focusing on that instead of market value, you don't get excited. You don't lose sleep when you have a COVID crash or the dot-com bubble back in the turn of the century. You know, I didn't get any phone calls when the markets went down
Really?
with my clientele. I mean, I had 150 clients. If I got one phone call, that was a lot, and
Oh, wow.
it was probably on an unrelated matter. Whereas whereas a regular broker in any of the firms, that I mean, the phones were probably ringing off the walls because
Oh,
all
yeah,
these
I'm sure.
people panicking, sell, sell. You know, I mean, that's the way Wall Street is. They all sell when the prices go down. They buy when the prices go up.
Right.
Nowhere else in your life would you do that.
No, that's true. Yeah,
You know,
that
if
is true.
they put those cars on sale, more people come into the dealership to take a look at them. When they say, "Oh, our prices just went up," fewer people come in, but not in the
Mm.
stock market. Not in the stock market.
Yeah, that's interesting. Thank you for mentioning that. I think that's an interesting perspective that, yeah, really the stock market's the only place where we really have that type of reaction. Everywhere else, it's the exact opposite. So, yeah, something to think about.
Yeah, and I didn't put that in the book.
Oh, we have to put it
So
in your next
that
one.
that 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 conversation didn't come up. I should. Yeah, the next one. I don't. think there'll be- I
Well,
don't
there
think.
you
I
go.
don't think I have another one in me. I don't.
I think you do. I think you have many more in you. So, kind of, what would be, um, for somebody who is really wanting to create that retirement independence that we're talking about, what would be kind of your first step, your first recommendation for that person, in regards to how they can get on that path?
Well, it's. I guess it all boils down, to that transition. That transition of saying, okay, I'm not going to just guess or hunch that or take a tip that this thing is going to make me rich.
Mm-hmm.
I'm going to take my existing assets and I'm going to invest them with a focus
Mm-hmm.
to bring me that income. And I'm going to do that now while I'm fully employed and I don't really need have you ever heard anybody say I don't need any more income? I used to
No.
hear that a lot. I used to hear that a lot. And I always used to say, you can't have too much income. Can't be too thin. Can't have too much income, So
Mm-hmm.
getting them to just accept that reality that they want to get to the point where they're making as much income from their investments as they are from their salary.
Right.
So if they get to the point where they say, I don't like this anymore, they can afford to give it up and do something else.
Right. Right.
So many people get trapped and they'll get to a situation like many and 20 years ago, a lot of people in my generation were just coming to retirement age, right?
Mm-hmm.
And here we have this, they're zooming along in 2007 and 2008 a little bit, and then all of a sudden their 401ks go down
Yep.
30%, and they say, "Oh my God, I can't retire.
Mm-hmm.
I got to work a couple more years." And a couple more years, it came back up, and they retired.
Mm-hmm.
But if you have that nest egg, instead of looking how much the value is and knowing that you got to take that value and spread it out over 25 years,
Mm-hmm.
instead of saying, well, I've got this value, but it's spitting out as much as I'm making. So what if it goes down in value? It doesn't matter. The income doesn't
Mm-hmm.
change. They're not related. So that's the key issue here is getting that mindset, getting yourself started early to focus on securities that pay income. Even if you just start, there are lots of good quality stocks out there that pay dividends. Just always buy dividend stocks. And then,
Mm-hmm.
you know, that's a start. Get out of the market value trace. Even in your 401ks, there will be some options that are not totally in the stock market.
Mhm.
so that, and you can, even if you only have 5 different things you could put your money in, and you should put your money in as many of those things as you can. You should have at least 6 or 7 choices,
Mhm.
so that when the stock market goes up, you could take your profits in the stock market just by changing your allocation percentage, or
That's true.
by telling your whoever you tell, say, okay, I want to take everything out of that stock market fund and put it in this bond fund for a while, you know.
Mhm.
And then when interest rates go really down and that bond fund goes right back up again, then you can do something else with it. But the market cycle and the interest rate cycle affect your positions in your 401k just like they do in your individual security portfolios, and you can take advantage of it. So
Mhm.
that's probably the second point. Recognize that the market is not a one-way ticket, one way or the other.
Mhm.
It fluctuates, it's cyclical. You have to prepare yourself for those cyclical changes and take advantage of them. That's the key.
Oh, very cool. Very cool. So, how much time do you think somebody needs to dedicate to, watching the market? I mean, I know you said that you watch it pretty closely, but I mean, for somebody who may still be working or likes to travel
Mm,
a lot, I mean, kind of what is the time commitment that you think
well,
is necessary?
I'm right now that I'm doing it myself and not through a brokerage firm as I had to do when I was working with them.
Hmm.
Um, I think I'm spending about an hour and a half to 2 hours a day,
Oh, that's not bad.
and that's pretty heavy duty. What I'm doing is that's placing orders,
Hmm.
and determining what I'm going to do and then doing it. Um, I usually do it after the stock market closes. So a person would be doing, if they followed my way, they'd be doing it when they got home from work,
Right.
which probably would really tick off their wife or their husband if it's the other way around. So most people probably do it in the morning
Hmm.
before they go off, or maybe some people even can do it at their lunch break at their own computer, because it's today in today's climate with the internet and everything else, you could do this from anywhere.
That's true. Can you do it on your phone?
You can do it with your telephone. Sure, you can trade stocks, and you can buy them too. I think it's a little bit more cumbersome on a small screen, but I haven't tried that yet. My plan for this trip that I'm going on next Wednesday is that I'm going to take my phone. I'm not going to take a laptop, and I'm going to limit myself to just taking the profits if they're above a certain percent, and I'll worry about reinvesting it when I get back. I'm
Oh,
not
very
going to.
cool.
Otherwise, it won't really be a vacation for me.
That's true. You'll
But
be
I
too
but
busy with the
I'm so hung up on the not. I know I've seen so many people pulling their hair out about profits that slipped away because they either were greedy or lazy
yeah.
and didn't take them. I'm not going to let, even for 2 weeks. I'm not going to take a chance that's not going to happen to me.
Well, there
You
you
know,
go. There you
and
go.
with money market rates at 5% and Fidelity. I don't mean to advertise for Fidelity, but Fidelity's, they automatically sweep money into the money market fund,
Okay.
unlike some brokerage firms. I won't mention the ones that don't. But
You're
so
probably smart.
so if I take a profit, at least I know I'm going to be getting around 5% on that money for the weeks
Oh,
that I'm
that's
away.
true.
Yeah. So how much time you spend really depends on how much money you need to make or want to make, because there
Mhm.
are two streams of income, and if you're doing the closed-end funds, and they're a very interesting vehicle that we haven't gotten really into detail about. If you're doing them, you're getting a monthly paycheck basically, and it's significant yields. And if your portfolio is big enough, that can be more than you need,
Mm.
to live on. So
Oh,
with
nice.
me,
Oh,
with me, I like to see that. I like to be able to say, okay, my year is 18 months. I've got 18 months of income in my year so far. I
oh,
like that.
wow.
I feel
Yeah.
good about that.
Yeah. That's awesome. That's awesome. Well, Steve, we are running out of time. So, do you have any kind of last final thoughts or words of wisdom you'd like to share with our viewers?
I think you've gotten most of them. out of me already. The income is king, and profit taking is is a methodology that goes with the idea of investing. I mean, the market is a trading vehicle, just like a garage sale, just like a flea market. The people say they want to sell this for that, but they'll bargain with you, right?
Hmm.
And it's
Hmm.
just that's what the stock exchange is. We want to buy it for this, you want to sell it for that. Let's compromise type thing. So it's a trading vehicle. So anyone that tells you or suggests to you that you should be in the market and buy and hold, or hold on to this because it's going to grow,
Hmm.
it's counterintuitive to the nature of what a market is.
Hmm.
And so I think if you can wrap your head around that and say, yeah, you're right, and I can have my own little business by having these diversified portfolios of securities, stocks, and bonds, and trade them, and if the prices don't go up, and or nobody comes into the store to buy it, well, it's paying me 10% a year to hold on to it. So if I can put those two things together, I can give myself income independence, and that's, I think, what we're all looking for, right? To do
Yeah,
whatever,
exactly.
to have enough income to pay for doing whatever we want to do. And
Exactly.
that's all you have to do to get there. Start early.
Yeah,
Start early. You can be there early.
yeah, interesting, interesting. I love that. Well, Steve, thank you so much for being here. And viewers, I highly recommend you go grab Steve's book and start reading it. I know that I am going to. And reach out to Steve if you need any help. He is offering a great offer to our viewers here today. If we can get that banner to go up, I think it's 25% off any services on your website. Is that right, Steve?
That's right. 25%.
Awesome. So keep
I'm
that in mind,
I'm
everybody. Go check
I'm
out
right
his
I'm
website.
writing it down again right now. So just make sure you tell me where you heard of this, take
Yeah,
the
there you
lead.
go. Let them know that you were watching Take the
And,
Lead, and that's where you saw it.
and Angie's told you to come over and see me. Right?
Exactly.
Okay.
Exactly.
That's perfect.
Yep. So, Steve, thank you so much for being here and for sharing with us your expertise and your experience and your insights. I really appreciate it.
Thank you for having me. It was great fun.
Absolutely. Thank you.
Okay. Bye.
One of my hugest wake up calls was I did not feel good doing what I was doing or being who I was being. And I always got told that there was something wrong with me. But you know what? There was something wrong with that situation because I don't believe, actually, I know that God did not create and put each of every one of us on this earth to be the same and to not be happy. And when you're embodying your inner phenomenal leader, you are better equipped to deal with all those struggles coming your way. And that's what's important. And that's what I strive to do as a conscious leadership coach, is to help others recognize that you are meant for so much more. You are meant to be the leader of your life and of yourself. And you are meant for greatness, to be extraordinary, and to have a life that you love. And that's why I love doing what I do. And that's why I know that everybody who is here, it's not a coincidence that you're here. I don't believe in coincidences. You're not here by accident. You did not randomly choose to come to this particular summit. You did not randomly choose to be present during this particular presentation. You were here for a reason. Now, if you've been watching our show regularly, you know that I am so excited that we've launched our premier transformational coaching experience, Meant to Lead. Now, unlike traditional leadership development programs, Mental Lead emphasizes internal growth and self leadership as the cornerstone of effective leadership growth and development. I've spent the last 2+ years meticulously crafting mentally, drawing from the insights I've gained from my own journeys in the healthcare industry, as well as an entrepreneur, as well as from guiding other workplace managers, leaders, coaches, and various entrepreneurs. Central to the program is my tested and proven 5 step coming into your inner leader process. And that includes the awareness phase, consciousness journey, mindset transformation, conceptual shifts, and skill set enhancement, as well as the 4 components we've identified as being crucial for personal transformation. And those are a proven strategy and process, acquiring the proper tools, having the right guidance, and being in an environment conducive for growth and success. Participants of our mentally transformational experience will embark on a transformative journey, discovering their inner phenomenal leader and learning to lead themselves to success and fulfillment. My philosophy is grounded in the belief that effective leadership stems from mastering self leadership and tapping into one's extraordinary power. So don't miss this opportunity to unlock your fullest potential. Go to our website now for more information on our Meant to Lead individual, group, and corporate offerings. Now, we've got some exciting news. We're introducing an opportunity for you to expand your mind by exploring the world. In March of 2025, we'll be embarking on a 10-day India Holy Festival tour that promises unforgettable experiences and vibrant celebrations. Join us on a colorful journey through some of India's most iconic destinations. For more information, send your inquiry via email to kamal@oversightglobal.com, and I look forward to having you join us on this incredible journey. And there you have it, beautiful souls, as this episode of Take the Lead, a consciousness movement with Angilie Kapoor comes to a close. I want to thank our amazingly insightful guest, Steve Selengut, again for joining us today and for sharing with us his wealth of investment knowledge and experience, as well as insights from his book, Retirement Money Secrets. Now, be sure to go grab a copy of Steve's book on Amazon. I have my own copy and definitely plan on reading it and learning about Steve's unique approach to investing and creating retirement independence. And also, thank you, Bright Light, for being here with us today, too. Remember, like I always say, I don't believe in coincidences, and you, Bright Light, were meant to be here today to receive whatever message you were meant to receive from this episode. So keep showing up, keep loving on yourself, and keep making progress on your journey to becoming the phenomenal leader I know you truly are. Now, be sure to join me next week as we'll be exploring another amazing topic with our special guest, Jeffrey Deskovic, who was wrongly convicted of a crime he didn't commit at the tender age of 17 years of age. He spent 16 long years in prison before he was miraculously exonerated at the age of 32. Now, I bet you are already intrigued and want to hear more about this story. I know I was when I first met him. Our conversation was truly powerful. We explored his horrendous experience, but most importantly, the work he does now to prevent this tragic situation from happening to others. It's a conversation that you definitely don't want to miss out on. So be sure to set your reminders to be back here with me on Monday, September 30th at 6 p.m. Pacific time. All right, my beautiful, phenomenal leaders, have a great week. Don't forget to buy the latest book that I am part of, Cracking the Rich Code, if you haven't already. And I will see you on Monday. Take care and God bless. Coming up next week on Take the Lead, a consciousness movement with Angilie Kapoor, guest Jeffrey Deskovich joins us to discuss Beyond Bars, a journey to justice. Don't miss next week's episode on E360 TV.